Hi everyone, we're here today to provide an update on the federal budget, which was announced last night. I'm a long-term accountant at MBNM, been here a very long time. And I've got Vince with me, who's one of our directors from the wealth creation side, working under the Ausplan banner. What did you think, Vince? Did you tune in?
I think it's sort of the budget hit the spot, hit the mark for the time being. I think it was a welcome relief to get some sort of bit of a cash splash. So hopefully that feeds into the local economy as well as the general economy. But you know, definitely politically driven, some of it, as we can see the timing of some of these payments. But overall, that was quite good. Yeah.
We'll go through a couple of the little bits and pieces now, and we'll touch on these in a bit more detail. But the things you'll hear about if you turned on Sunrise this morning or your radio, one-off payments, some increased tax offsets, some fuel relief, and some other superannuation rules that they're extending as well. We'll go through those in a bit of detail. Do you want to start with this one, Vince?
Yeah, so this is a one-off cash payment of $250 to anyone who's receiving a social security or Centrelink pension, but also to some concessional card holders who aren't receiving it. The timing of this is the 28th of April, which is a couple of weeks, or they were suggesting it just before the election. So you'll hit the pocket of retirees. It's not counted as income, or it's not Centrelink assessed, so it's exempt payment, which is good.
And also for individuals, there's an increase to the low and middle income earners tax offset. So that's currently a maximum of $1,080 a year, which a lot of people would be aware that they're getting. So the 420 increases it to $1,500 a year. And any taxpayers earning less than $126,000 will get some benefit. And the other point to note just at the bottom of the screen there is this offset was due to finish at June 22, which we're coming up on. So there was no extension of that or mention that would continue longer. So whilst they've increased the benefit for this short period, it will disappear altogether, we're expecting, going into next tax year. So that's up to, you know, $3,000 this year for a couple, which is going to disappear next year. So people might feel that one.
Yep.
And also from a tax point of view, there's no change in tax rates for this current year. So no surprises there, good or bad. And there has been some pre-announced changes to income tax rates coming in the next few years. They're still planned, and they were announced back in the 2021 budget. This helps me when I'm going down to see the Bombers hopefully have a win, Vince, at some stage.
The way they've been playing the last 2 weeks, you're probably not going at all.
I know. But at least I'll save in some petrol. So 22 cents, which supposedly starting today for 6 months. I haven't seen the petrol prices on the way to work, but I presume they've come down, and ACCC are threatening big fines for those who don't pass it on, but we'll see.
It's interesting that it's good timing also coming up to Easter holidays, like families want to get away. But it's interesting with their projection, they're thinking in 6 months that barrels of oil drops from $144 to $100. So hopefully when this runs out, that should continue on at the petrol without the cut of excise tax.
So obviously helping everyone with the car, but obviously businesses as well.
Yeah. So this is an interesting one. Again, government is trying to assist first home buyers getting into the market. As we all know, it's quite difficult. We used to think it was just in the city, but it's obviously regional as well. So they've extended the amount of places offered to first home buyers from 10,000 to 35,000 places this year. Now, we've done a little bit of work in this space with clients, and more so Bree. So it's a sort of niche area that Bree's got. So if anyone's got any questions or wants to have a chat to Bree, please contact our office. She's sort of the expert in this area. So
very hard to get into the market, obviously.
Yeah.
Not already. Yeah.
So this is a continuation. So what we've found probably come with COVID a couple of years ago was with a lot of self-funded retirees or just people having a pension from their super fund, with the market volatility has eroded some of their account balance. So the government has said for anyone drawing a pension, the 50% reduction on how much they need to draw down has been extended to June 2023. I think this has also come about with obviously the recent Ukraine war. So you can see the markets have been quite choppy and volatile. So this will be also a welcome relief. So it's allowing superannuation pension retirees not forced to sell down any of their shares to pay pension payment. So this is also a welcome relief.
Yep.
Going forward.
And due to effectively double the next year. So eventually we'll get back to normal.
Back to normal.
Yeah.
Right.
I'll touch on a couple of things just in the business space. There wasn't a great deal, but these things might be handy for a lot of businesses. So we're talking about upskilling was the key word, and also we've got digital adoption. So effectively, we don't want to get too complicated here, but effectively they're giving you an extra 20% tax deduction for certain training expenditure by businesses. So for the training, it's got to be provided for employees that are in Australia, and it's got to be delivered by an Australian entity. So there'll be more details obviously released about exactly the requirements. And then the second one there is the same 20% extra deduction for business expenses supporting digital adoption. You might ask, what's that? Some examples of that are implementing portable payment devices, cyber security, which is obviously a big issue at the moment, and any cloud-based subscription or services that you might be getting into as a business. So there's some specific dates on when this starts and finishes. There's also some caps on the spend each year. So please get in touch with us just to make sure we're checking all the details before you go and jump in. A couple of other things, very minor, in relation to business and tax. The pay-as-you-go instalment system is a system whereby you're prepaying tax for the current year based on last year's result. The tax office would usually take last year's result and assume a 10% sort of uplift factor. They're recognising that people might need to hold their cash, and so that'll be reduced to only a 2% uplift. You'll see that happening from September 2022 onwards. And they've second point there, they've added the cost of rapid antigen tests, which most workers obviously had to use quite a bit in the last few months and may continue. So that's now a tax deductible expense and no fringe benefit tax implications, which is good. There's various COVID state support grants now exempt from income tax. Looking through the list, there's nothing there for Vic. So they're specifically New South Queensland and South Australian ones. And the last one, there was a big promise about funding across that mental health support and financial counselling space for anyone who's struggling in those areas, and access for businesses to hopefully get the help they need for their staff.
This is just more of a reminder that we're approaching June 30. So as of next financial year, superannuation guarantee rises to 10.5%, and that will continue to rise up to a cap of 12% up to 2025. So just a friendly reminder to employers, but also employees, that they should start to receive that increase, because it's sort of just crept up on us. So it's just a bit of a friendly reminder on that going forward.
Yep. So there weren't many really major changes or shock items, I guess, and a lot of the announcements that came out last night were already leaked prior to the budget coming out, which is obviously a strategy that is used. The main point would be make sure you give your advisor a contact, whether that's in the accounting space or the wealth creation space, and just talk over what those changes might mean for you.
Yeah.
Anything extra to add, Vince?
No, that's about it. I think it was a pretty simple budget in a sense, but it was very targeted to certain age demographics, like the younger people getting into the home market as well as the retirees. So some of it will be a welcome relief in the short term. So,
and it will be very interesting now to see what happens with the election. It's obviously the election will be announced very shortly, and then we know we're going to have what might be a very tight election. And I noticed that a lot of these things are obviously coming in immediately as election sweeteners.
yeah,
And of course, anything that's promised after May may or may not happen, depending on with the government.
it's interesting to see that, you know, Labor is supporting a lot of these, cash splash, I suppose, you know, with the funding of the $250 and whatnot. So they're going to honour anything going forward in the fuel excise tax cut. They're going to honour that as well. So watch this space.
All right. Please share this on your social media platforms and give us a call to talk about your personal circumstances. Thanks, guys.
So guys, thanks, Anthony.